Yes, additional is for your practice money. I request to everyone to do additional parts because what you are going to do, you're going to come for the classes only Saturday and Sunday. Apart from the weekdays, you have. I understand that you most of the persons are working professional, but I request to do some extra activities related to the program because if you are going to do some extra work related to the modules, related to the sessions, it will definitely help you. Sanjeev, what meeting ID access code you are asking? LMS is asking you only for your username, which is your email ID, and the password I mentioned, it's Ematicus numeric 1. In Ematicus, I would be the capital. Kritika, LMS is already assigned to you, so you don't require for the after every session. You have LMS for the 24-hour access. Any another thing, guys? Any questions? Any doubt related to the LMS access? Okay. I understand in the starting of the session, you don't have a number of doubts related to the LMS access or any more thing, but it's fine. If you have any doubt, any questions or query after the session or in the weekdays, you can approach to me. You already have my mobile number and my email ID. So please feel free to approach to me. And one request for every student, if you are reaching out to me, so please reach out to me over the WhatsApp number through WhatsApp calling because at my area there would be a network issue. So once you're going to try to reach me a normal call, you will be not finding my number to be active. So please drop me a message in the WhatsApp or you can call me through WhatsApp call. I will give you the call back as well. But the elements related to that day's training will be 2 hours. Kritika, what LMS related day of training will be? I'm not able to exactly understand which trainer told you. Or else, Kritika, if you want, okay, Kritika, done. We will connect separately on your question. It's completely fine. So this is all about which I need to be covered. Anything you want to ask me, or should we begin with your lecture, guys? Okay. I think no questions. Let's begin with the session. So we do have a trainer, Mr. Amardeep Singh, who is going to take care as a guest lecture for your session today. So I will ask Amardeep sir to come across and we will start the session accordingly with the batch.
Thanks, Amini. And good morning, everyone. This is Amardeep. I'm going to be walking you through with what this course is going to cover today. And we don't have a formal agenda to cover today because this is just a batch launch and the first session with all of you. So I'm going to keep it open for all of you. So maybe what I can do, I can briefly walk you through with what is the overall perspective that we're going to cover in this entire course. And then I have one small case study which I will be walking you through with. And then we can, I'll be open for any questions that you may have related to this course. All right. So before starting, just a quick check if you're able to hear me well. And I'm also going to share my screen, though I will be talking about the Excel file a little later. But if you could just confirm to me, you're able to see my screen and hear me well. Awesome. Thanks, Kritika. All right. So just to give a brief introduction about myself before starting. Yeah, thanks everyone. So as I said, my name is Amardeep and I have a total work experience of close to about 14 plus years now, primarily into financial modeling, business valuation, mergers and acquisition, and project finance. So all across my career, I've been into the finance domain, including the valuation, modeling, and the research part. So I started off my career with a consulting company called PKC Advisory, and post that I shifted to KPMG, and then now I'm in a different role. So what I do, I basically, out of my hobby, I like taking these sessions, and I enjoy interacting with the students and also the working professionals to share the knowledge and hear the perspective from them as well. So what I'm going to do today, in the first couple of minutes, I'm going to walk you through with what you're going to study in this overall FAP program, so that you have a broad understanding of what lies ahead of you. And when you come forward for the future classes, you would know in advance that this is what you can expect from those sessions. And as Abhijit and Damini already highlighted, given that this is the first session, so I'm just reiterating the same fact that the feedback is very, very important. So after the end of each of the sessions that you're going to attend in this course, if you have any feedback, please reach out to Damini and flag out your areas to her, and she'll be more than happy to assist you with. Now, we are going to have the online sessions in these unprecedented times, but as soon as we are able to see you face to face, we'll be back to the classroom and have these sessions conducted out there. Now, what we are going to cover in this particular course is, this is basically, as the term itself suggests, this is going to be around the financial analysis part. Now, when I say financial analysis, it's not just a normal financial analysis stuff. It covers basically everything that we have in Excel and also in the finance domain. Now, why I use the term Excel? Because it seems that my screen is stuck. I can't. Just give me a second, please. My screen is stuck and I can't click on my screen. Okay, I don't know what has happened, but anyways, we can proceed. Uh, yeah, I can enter now. Oh, all right. I'm sorry for that technology glitch. So what I was saying that basically in this particular course, in the FAP, which is Financial Analysis Pro Degree Program, conducted by Marticus. So we'll be talking a lot about the financial analysis part. Now, I do understand that the participants who we've got who are going to attend this particular course, they are working professionals as well. So we have got a mix of working professionals and the students who are attending this session. So that basically gives you a very good platform to interact with each other as well and have a good amount of learning and learning basically from the experiences of the others as well. So what we are going to do, we are going to cover a lot of bit about the financial analysis part. Now, what comes in financial analysis is basically a generic term. So it can cover a wide gamut of areas that we have in the finance domain. So I'm seeing the chat window. So if you could just highlight some of the areas that come to your mind when you hear the term financial analysis. Now, as I said, this is basically very, very wide term. So please feel free to highlight those areas in the chat box so that I can make a list of that over here, and then I'll add on what exactly we'll be having in this particular domain. So I look forward to seeing your messages on what you think financial analysis basically covers. Okay, profit and loss statement. Great. So it covers profit and loss statement. Fine. And Kritika has given a better word, in fact, a wider term, which is financial statement. So I would actually say that it covers the financial statements. And can I call it financial statement analysis? Because it's going to cover everything, including the profit and loss statement, the balance sheet aspects, and also the cash flow part. Now, don't worry too much if you don't understand any of these terms, because as I said, the perspective is more to give you an orientation of what it is all about. So we are going to cover each and every topic in greater details as we move ahead. All right. So once you look at the financial statements, you basically cover all sort of financial statements of the company, including the profit and loss statement, highlighting the profit being generated by an organization or the loss being incurred by it. And we also cover the balance sheet part, which shows the financial position. It shows the financial position of the company, highlighting the kind of assets that the company owns, the liabilities that the company has to pay, and the related stuff. Uh, can I just request everyone to please be on mute? Thank you. As I said, this P&L covers the financial performance part, which indicates that what kind of performance the company has seen in the past in a couple of years. And that's what gets highlighted in the profit and loss statement. And cash flow, which is basically another important ingredient of a financial statement, is something which shows the reconciliation of the net profit that a company generates vis-a-vis the stream of cash flows that the company is enjoying in a particular period. So this is one area that we covered in the financial analysis. That's fine. What else? Yeah, Rishabh, you have highlighted that it also covers the investment decisions. So that's fine. Rohit, your point is also valid, that it covers the ratio analysis part. So let me put that across here. So it covers the investment banking. Okay, Manmeet, I see that you're saying you cannot hear me, but can I just see some chat from others also if my voice is audible? Otherwise, I'll reconnect. Uh, can somebody? Okay, great. Okay, so Manmeet, I believe there could be some network issue at your end, because I believe others can hear me well. Can I just request you to have to check the speaker, or if the problem still persists, please try reconnecting. That might resolve the issue. Okay, so let's proceed. So as I was saying, it covers the investment banking part. Now, this term that has been highlighted, it's basically a very wide term, because it covers a lot of areas. And investment banking, I would say, it's more of a profile that you get in the market. So, but what we cover in the investment banking, so when we hear this term investment banking, it's more to do with the consulting job that we tend to do in a corporate or in a company to assist other clients. So let us imagine a situation that there is one company which is looking to acquire another company. Now, as part of that acquisition, what's going to happen that when you have to analyze the financial feasibility and viability of undertaking that kind of acquisition, then you need some expert who can assist you in doing that, right? And that expert is none other than the investment banker. So whose main job is basically to provide you the financial advisory and consulting and assist you in executing that particular deal. So this deal could be as simple as an acquisition of another company, or it could be related to raising funds from the market. Now, all of you would be aware of this fact that every other day we hear this thing that this company is going for an IPO, this other company is raising funds from the general public by going for an initial public offering. So all that stuff basically requires some bit of assistance from the consultants or financial advisors, and you could safely categorize all of them under the investment banking area. So in the investment banking, what happens is that you tend to work more on the IPO systems, the debt raising transactions, mergers and acquisition, or maybe other capital market transactions as well. So it's more to do with, as I said, is more to do with assisting the company in raising funds or executing some other corporate actions like the inorganic growth through mergers and acquisition. Now, all of these terms that I'm using here, so as I said, that we have separate topics on each of these areas as we move ahead, so you will get to know about it in greater detail. But what happens is that, as I said, that investment banking is, look at it more like a profile. That when you go to a market and try to do something in the investment banking profile, then it basically refers to the domain which covers creating the financial models, conducting the business valuation, and maybe analyzing the deals. So this is more what we include in the investment banking domain. Now let me spend a minute on each of these terms. What do we mean by financial models? Now this is one of the most common terms that you would encounter if you go in the investment banking domain. So anyone who knows what a financial model is, just a couple of words to explain the concept of financial modeling. Like I've already mentioned financial statement just above the investment banking term, but what comes in the financial model? Anyone who has heard of this term before? All right, that's fine. So let me actually explain what financial model is all about. So financial model is more related to estimation of future financial numbers. So what we do in a financial model is we try and estimate the future financial performance and position of an organization. So let us assume that I am trying to raise funds for one of the startups that I've recently got into, and I have a business plan that I want to execute. And for executing that business, I need some funds because mine is a startup company, so I need some funds to be able to bring that project to the life. So if I need some funds, I would basically go to somebody else in the market and I would ask that person to provide me certain funds against some sort of stake that I'm going to offer him in my own company. So you might have noticed in the news articles as well that this startup company has raised so and so amount of money for a stake of 20%, 30%, and so on and so forth. And it's not just relevant for only the startups, but also relevant for the well-established companies as well. Now, we don't have to go too far, and I'm sure that all of you would have heard of this series of funding that has recently happened in the last 2 to 3 months in Reliance. So you would have seen that so many parties have invested a huge amount of money, lakhs of crores, in Reliance for the Geo platform. And Reliance, if you say, it's basically a very big company. In fact, I would say in terms of market cap, it is the biggest company that we've got in India, right? So on the stock market, if you check the market capitalization of Reliance, it's pretty huge. Still, it was raising funds. So the point that I'm trying to tell you over here is that if you need to do the future financial numbers estimation, it is not just restricted to a startup company or to a small company or a mid-sized company. It could be applicable for a well-established company as well, which is just trying to, analyze that how its future is going to look like. And that's the domain wherein you would see these financial models coming into picture. So financial modeling is all about creating a mathematical model for estimating the future financial numbers of any organization based on the business plan that the company intends to follow. And it becomes all the more relevant for a startup company because they don't really have anything in the historical financial data points to depict their performance. So for a startup, it becomes all the more critical to explain how their future is going to shape up, and they try and quantify it in the financial model. So in the financial statements, we could either look at the historical data, or in the financial models, we could look at the future projections, right? That's the basic area that we cover in the financial models. And obviously, what happens is when you create the financial model, whoever would have invested in the Reliance for the Geo platform, they would have got some sort of financial model for the business that Geo platform is going to do in terms of various domains that it has right now, and also the domains that it might add in future. So all of those areas would be brought together, and the business plan would be translated in a quantified fashion to be able to work out how its future is expected to look like. And that expected future financial performance is going to tell you that what is the right price to be paid if I have to invest in that particular organization as of today. So that could be relevant for any company which is looking to raise funds. Or what you want to do is that, say you're already doing that business for quite some time, you had invested some time back, and now already 5, 7 years, 10 years have passed, and you want to pass on your ownership to somebody else, and you want to exit out of that business. Now that exit from the business is also based on this logic that you need to have the financial model. You need to know where the business stands and where and what kind of performance it is expected to show in the future. And then that new investor who will come in the market, in the company, who will be onboarded in the company, will basically tend to enjoy the future cash flow. So that undermines the importance of the valuation that we need to do for that particular company. So what we need to understand is that once you have identified the future financial numbers, you also need to conduct the valuation of the business that this company does. And the other area that I said the investment bankers tend to typically do is they help you to analyze a deal, and that deal could be related to buying a company, or it could also relate to selling a company. So you want to acquire a company, you would get into a deal, you would take help from an investment banker who would help you not only to chart out a proper plan, but it would also assist you in explaining that these are the 5 or 7 opportunities which are there wherein you can go and buy them. And on the other side, given that they have a good database and the network in the market, if you are trying to sell your company, then they will try and find some prospective buyers for you. So they work on both buy side and the sell side, and they assist you in basically executing your deal. So what you could say that they are like a platform. Investment banking is more like a platform apart from the financial advisory, but to bring together the buyers and sellers of companies in the market. So that's another area which they typically capture. So what we will do in this course, we will cover basically everything right from the scratch, covering the explanation of what financial statements are all about, the nuances related to the financial statements, how P&L is created, how balance sheet is created, and how the cash flow is integrated by using the P&L and balance sheet. And once we understand all of that, obviously somebody highlighted, we could also use it for the purpose of ratio analysis and try and understand that what performance it has shown and translate it in relative terms, in terms of ratios, that in terms of percentage, this is how the margin looks like. This is how the liquidity of the company looks like. And all that stuff we basically depict in the form of ratios. So once we are done with that, we would understand a bit about what are these terms like private equity, venture capitalist, what you basically need to do if you're going to work in a startup. So these days, obviously, you would know that there are so many companies which are coming up with a startup idea. And this is even more important and pertinent in these times when people are actually looking forward to start their own business. And whenever you start any business, you can't just really leave or do it without planning. So, and that planning requires you to spend good amount of time to understand the strategy that you intend to follow in future, but also the financial aspects of it. So that's another area that we would cover in the in this particular domain, that whenever the companies like these, they have to do the proper financial planning in terms of identifying how the future is going to look like, how the business plan would be shaped up and quantified, and how they're going to approach the venture capitalist or the private equity players to put funds into their business. So what happens is that you would know that this is what I intend to do, but then that startup may not be well aware that this is how I need to approach the venture capitalist or private equity player to invest in my company. So what happens is that over there we will see the nuances of understanding this particular domain as to what is the proper format in which we could chart out our plan, and we could showcase it to the prospective investor who could put certain funds in our business. So that's what we will cover up over there. Now, what's going to happen that is part of this overall discussion, you might notice that how do we do it? There would be a little bit of conceptual clarity that you would need, though you may already be aware, a couple of you may already be aware of all of these terms, but then what we are going to do in this particular course is that we will cover a mix of the discussion to explain the concepts related to all of this. We would bring together some technical jargons which are typically used, and then we would showcase if you were to do that task on your own and you get into the execution area, then how you could basically do that. And these days, if I tell you, and in fact I believe that it's going to last for quite some time, that we basically tend to follow a common platform wherein all of this analysis is done, and that common platform is none other than MS Excel. So in MS Excel, there are so many functions, tools, and functionalities that an average person would typically not be using even 5% of it. So what we are going to do, we are going to spend good amount of time to understand some of the essential areas of using MS Excel platform, because at the end of the day, if you have to do the financial statement analysis, you would do it in MS Excel. You need to do some sort of a financial research, that also you would do in the MS Excel platform. And if you need to create some sort of financial models, wherein we would spend good amount of time in this particular course as well, so you would notice that it is purely done in MS Excel. I wouldn't deny this fact that there are other platforms as well which are being used by companies right now, and I'm sure you would have heard of these terms like data analytics, you using Tableau, using Power BI and all that stuff for the purpose of dashboarding. But to be honest with you, creating an integrated financial model in MS Excel is still the common domain which you would find in most of the companies, right? Because that gives you a very good platform to maneuver the assumptions that you're taking about the future. And the moment you make a small change in Excel at one place, you automatically see the integration of it in these subsequent sheets as well. So let us say that I am trying to estimate the company's future financial performance, and just that I get to know that this company is into, hospitality domain, and it is basically doing the business of giving rooms on rent. So it's a hotel business. Now what happens is, in a hotel business, you basically drive revenue from. So if I were to, list out that what are the revenue drivers. So we generate revenue from, most common thing is rental income, that you give your rooms on rent, you generate income out of it. Then you also generate some income from food and beverages. That's another area. Then there could be some other miscellaneous operating department income as well. So let's say miscellaneous other revenue coming in the company. Now what happens is, when you're trying to create a model, you wouldn't just simply say that my revenue was 10 and next year it is going to increase to 12. Because if somebody is going to ask you this question, that why 12, why not 13, why not 11, and what is leading to this increase of 2 on a base of 10, then you should have a proper answer for all of that. So what happens is that when you are creating something or doing this kind of analysis on an MS Excel platform, the perspective is you would list out all the drivers related to the rental income at one place to say that these are the total number of rooms by category, that I've got, say, a standard room or a single room. I've got 50 single rooms. I've got double bedroom, which is like 25, and I've got some executive suites like 15. So in total, say in my company or in my hotel, I've got 90 rooms. So it's a 90 bedder, or it's a 90 room hotel. And I'm expecting that next year, my occupancy is going to be say 60% over here, 70% here, and 40% over here. And the typical average rental per night that I'm going to charge is say 1000 over here, 1500 here, and say 2800 here. Now this data is going to help you work out the rental income. Now there would be a proper research why you are taking any of these assumptions, but what is happening that you're trying to list out all assumptions for finding out the revenue of this company. And what's going to happen that at a later stage when you are getting your model reviewed with somebody, or you yourself are trying to analyze your business and you want to see that this COVID situation has come up and now I want to modify the assumption. So what I'm going to do, I'm going to say that my occupancy for the next 3 months is hardly going to be 20%. It's going to be 15%, and probably this is going to be just about 5%. So what's going to happen at the moment you make this kind of a change in the model, you would automatically be able to see the impact of this change on the final output. And that change that you do at one place is integrated at other places in the file. And that's the best option that Excel offers to us, that it helps us to create integration between various sheets, right? So what we need to do, that first of all, we need to prepare ourselves with the kind of functionality that Excel offers, and then we would definitely be able to use it to our own advantage. So what is going to happen that when we would proceed to discuss all of these topics, it is not just going to be a theoretical discussion. It is going to be a practical part, and we will be doing all of that on some Excel file, and we will see that if you get into the execution, you get on the ground and you have to do this kind of task, then what is the best approach to do it, how you can handle it, what is the best option, or what are the best practices for executing any kind of project relating to this. So that's essentially going to be the focus area in the classes as we proceed further. All right, so what we're going to cover, we're going to cover everything related to finance. Just to summarize and bring it all together one more time, so we are going to cover everything together related to the finance domain, covering each and every aspect of finance which you may require for the purpose of doing a task related to the financial analysis, financial research, or the financial modeling part. Now these are the areas that you would typically handle in any company. If you get, this is something that is expected out of you. Now obviously there are other developments also which keep on happening, but these are the common things that you would encounter in most of the companies, and that's essentially the coverage of this particular course. All right, so I will take a pause here for maybe 2-3 minutes to address any questions that you may have related to the course coverage part, and then I have got a small case study which I want to cover, which I will be talking about in next 5 minutes. But these next 2 to 3 minutes, 5 minutes, I want to hear from you to understand if you have any questions, you want me to address anything related to this particular course. So please feel free to highlight those areas to me. Use the chat window to ask any questions that you have. Okay, so Manmeet, your question is that what is financial research? Now, in simple words, Manmeet, if I have to highlight that financial research and financial analysis would go hand in hand. So what we do in financial research is, let's take a practical example. If you get into a company which requires you to do a financial research kind of work, or which has a profile related to the financial research, what exactly is expected out of you? Now over here you saw one example when I was talking about creating financial model for a hotel. Now what's going to happen, say you're working on a financial model of a particular hotel who's looking to create a financial plan or a business plan for the next 5 years, and you've created this model in Excel. Now what's going to happen that when you put any of these assumptions, like how many rooms you've got in the hotel, that's a known information, but what is the occupancy that the hotel is expected to enjoy? what is the rental that it can charge. Now, these are some of the assumptions that require some bit of logic. Like if you're just sitting in a room and creating a model without even trying to understand that how this hotel business works, what is the operational model of this particular sector, we can't really assume this 20%, 15%, or 5%. You might say that it should be 80%. Somebody else might say it should be 50%. So how do you arrive at a particular assumption to be taken for analyzing any organization's business? That assumption is backed by proper research, and that's technically called financial research. Now, what you might be doing as part of the financial research is that, let's say, you would first of all understand the economy, and there is a term which is called EIC analysis. Anyone who has heard of this term, EIC? Anyone who has heard of this term before? All right, no problem. Now, what we do in EIC analysis is it covers three areas. A, economy. B, industry. And C is company. So what we cover in EIC analysis is we first of all try to understand that, okay, where is my hotel? My hotel is in, I'm operating this hotel in Mauritius. So let me first understand that how the economy of Mauritius is going to look like. Let us understand that if I have to create financial model for a hotel which is operating in Mauritius, I need to first of all understand the economy of that particular country. Because without that, I won't be able to justify the assumption that I'm going to take for that particular hotel. Now, if you talk about a disturbed economy, probably the tourism is not going to be there. So that aspect would come from economy analysis. So what we do, first of all, we try and understand the economy, that how that economy is operating. What are the government regulations driving that economy, or specific to the business that we are doing. So all that stuff, we begin with the economy analysis, and then we get on to the industry analysis, which covers the domain of business that we are handling. So if right now I'm talking about hotel business, then I would get into the hospitality domain as to how that industry is performing. Now, if I say that right now, if I'm going to do the analysis of Mauritius, I would say it's more driven by tourism, but right now, because of the travel restrictions, nobody is going there for the tourism. So this industry is impacted badly. Let's talk about some other industry in the normal times. So if we have a normal time, and again, I'm talking about the same economy, which is Mauritius, but now I'm not talking about hotel, but let's say I've started this company. So let's say Imarticus decides to enter into the learning business over there as well. Now we get to know that what is the, I will go back to the economy analysis, and as part of my financial research profile, I will see that in Mauritius, what is the total population? And I get to see that the total population of the Mauritius economy is, I'm just throwing an example, let's say it's only 2 million. And I think it's close to this only. So let's say the population of Mauritius is just 20 lakh people. And then I look at the demographic profile, that out of those 20 lakhs, the people, or the number of the number of citizens, or number of people rather, in a particular domain of say 20 years to 25 years or 20 years to 30 years is just about 10%. And from 30 to 50, we've got about 20%. Now that helps me to identify the addressable market. And then I come to a conclusion that this economy is so small in terms of population that probably doing this business over there is going to be a challenging task. Because the addressable market is so small that I'm not going to be able to perform well in that particular area. Now, that's something that I would be able to analyze when I look at the economy at an overall level. And then that economy analysis is going to tell you that how a particular industry is going to react or is going to perform in that particular space. All right. And finally, if we have a particular company in mind, then we get onto that part, that this is how the economy is doing, this is how the industry is expected to perform. But I'm talking about this company XYZ, which is in that industry, operating in that economy. and these are the specific factors of that company. I will look at that. This is how the company's sales has been in the past. This is how the company's operating cost has been in the past. This is what I witnessed in terms of profitability margins that this company was making in the last couple of years. And then accordingly, we use it for the purpose of identifying the future plan as well. So what happens is that as part of the financial research role, we look at the areas to support the financial analysis that we do. Whatever work we do is backed by a proper research, and that research profile is basically called financial research. And we have got a lot of companies in the market which offer the financial research profile. Like if I was speaking about I was speaking about my experience when I started off my career. The first profile that I handled was related to the research analyst. And you know what I did in the first 6 months of my career, I basically was working on collating the relevant news articles and the economy related articles for the Middle East region, because this company that I was working with was having the parent entity in the Gulf Cooperation Council region, and it had got investments in almost 15 to 17 countries in the wider Middle East and North Africa. So my role was more to do the research of all of those economies and all the industries. So we basically had a team which used to analyze the different industries, and we were providing the drivers of those industries to everybody out there who are working on the financial consulting profile. Because the point is that you can't really provide consulting to your client unless you have done a research about it. And I think that's a valid point. If you would appreciate this fact that unless and until you have the proper data points to support what you speak, you won't really be able to justify what you are doing. So if you hire somebody for helping you to do some business or to translate your business plan in a financial model, then you would need to support each and every number that you're taking over here. And that is backed by financial research. So you look at the company, it could be, let's say, PKC Advisory, which is there. We have got Grail Research, we've got the Smart Cube, EXL. In fact, all these big fours have also got a knowledge division. All of these companies, and in fact, the investment banks also have got this kind of department which works on the financial research profile. So financial research is definitely a big domain in the market, and I would say there is no fixed job that you do in a financial research because it covers multifarious elements. It covers everything. You might be assigned a particular industry to track. Let's say you are going to track the telecom industry in Africa. Then you are going to cover everything related to that particular industry in that economy, which is assigned to you. Now, big companies can afford to have a specialized team, while a small company will make you a master of all. So that's typically what we capture in financial research, and obviously a subset of this would be equity research. And equity research is a very common profile available in the market, which covers the analysis of the company, specifically the company. And this requires us to work on the financial models and do the business valuation, which is more to do with the fundamental analysis of the companies. So this is what we typically cover in financial research and equity research, Manmeet. I hope this answers your question. For anything else, please let me know. And others, if you also have any question, please. Okay, so Kritika, your question is that after completion of this learning journey, what all job profiles we can get into? Now, let me list out the various opportunities which exist right now in the financial industry. So let me categorize this in broad heads, and let us understand that what kind of profiles we see in the various industries. So what happens is that when you are in a finance domain and you decide to get into a job related to finance, then you will have to first take a decision that what kind of profile you want to handle. And that would basically emanate from a fact that what are the profiles which are available in the companies. So I would say that all the companies are divided into two broad heads. So I wouldn't say there are two types of company, but two types of roles that you would find in the market. One is in-house finance role, and the second is consulting role. So what is the difference between in-house finance role and the consulting role? In in-house finance role, I'm talking about working in the corporate finance division of a company. Let's say you take an example and you join a company which is Dabur. So you decide to join the Dabur India Limited, and what you are supposed to do, you join their corporate finance department. Now, the example that I'm taking over here is basically a generic example which would be applicable for each and every company. Now, you talk about FMCG company like Dabur, you talk about any other company like Airtel, you talk about energy companies, you talk about any company in any industry. The thing is that there would be a corporate finance team. Or what you basically do in your corporate finances, you basically cover each and every aspect related to the finances of that company. Now, don't confuse the corporate finance role with the accounting role. Each and every company would have an accounting team which is more into the bookkeeping part. So accounting is more to do with the bookkeeping part, wherein you do the data entry related to the financial transactions. But then in the corporate finance, you cover the areas related to probably creating the budgets. So Dabur wants to create a strategic long-term plan, and it has asked us to create a 5-year budget for it. Now, when you create a 5-year budget, you're basically talking about creating a model of Dabur and working in Dabur. Because the best part over here is that because you're working in Dabur, you would have very good amount of data information and the data availability with you. That's what you typically tend to do when you are doing an in-house finance role. Let's say the company has asked you to create a departmental wise forecast for the next 12 months on a monthly basis, so that the CFO of the company can hold regular meetings on a monthly basis to review the actual financial performance. So you want to do the actual versus forecast on a monthly basis, and you want to identify the variances and do the variance analysis. So you get to see that I had forecasted that this particular division is going to generate 10 crore rupees of revenue in this particular month, but in actual I've seen that it is only 8 crore rupees. So what is the reason for that 2 crores variance? To try and analyze it. So from a financial standpoint, you get to know that the price was forecasted to be 100, but because of the bad market conditions, I had to reduce the price by giving certain discounts. So the price was reduced by about 5%. I was expecting a volume of 1 million units, but because of these issues in so and so places, the 1 million unit volume was trimmed down to just about 8 lakh units, or maybe 8.5 lakh units. So that analysis from the financial angle basically stems from a fact that you're trying to analyze it at a departmental level. That's an area which you could handle in-house in a particular company, covering the budgets, forecast, covering their being or acting as their finance business partner. So you work very closely with the businesses, whoever is looking to, let's say, Dabur is looking to get into uh, doing some particular deal, and you need to advise them that if it is financially viable or not. Dabur is looking to enter into a new market in terms of a new product, so you do the analysis for it, that whether it is going to make financial sense to enter into that particular market with this new product or not. So that's one area that we typically see in-house. Other area, coming to the second part, or the second type of role that we typically see, is the consulting profile. In consulting profile, you basically get to work on various clients' work. So say you're working in KPMG, and KPMG, say you get an assignment from Bharti, who is looking to get some sort of analysis done. Or Bharti, for one particular company, is looking to get a financial model created, and they have appointed KPMG to do that task. So KPMG team is going to play the role of consulting, and they will be providing the assistance to that particular corporate in terms of creating the financial model. So that's the second type of role that you would typically witness in the industry. So to answer your point, Kritika, so you need to first see that what kind of role is going to excite you. Because if you want to become a master of one particular industry, then it makes sense to get into an in-house finance role. Because in a consulting profile, every other day you would be working on a different client. and that client could be from a different industry. So if you're going to work in a very big corporate which has an industry specific division also, then you might be saying that I'm going to work or handle the telecom industry only, or I'm going to handle the FMCG industry only. But in most of the companies, to be honest, and the realistic situation is that you would be working on various industries if you get into the consulting profile. So it's more like a personal choice that we have to make, that what kind of role we find exciting, right? The other area is that a couple of people may like it that when you get into the in-house profile, you get access to better information and you are closer to the data point. So you are able to do a deep diving in terms of doing better role, which is typically not the case if you are in the consulting domain. So if you like crunching more numbers, doing more analysis, probably in-house role could be exciting for you. Otherwise, you might want to explore different industries, different type of work, then consulting is better for us. Now, who is going to hire for consulting roles? So we have got Big Fours who would hire for consulting profiles. So like each of the Big Fours have got a center of excellence division related to finance. Like if I speak about KPMG, KPMG has got KPMG India office and KPMG Global Services office. So in India office, they are more into catering the India-based clients primarily. And in KPMG Global Services, which is more like a joint venture of various other member firms, they try and assist the other KPMG member entities, wherein they've got a specialization department. That one department or one team works on purely the financial models. Other department works purely on the mergers and acquisition related work. There is another department which works on accounting advisory. There's another department which works purely on giving the tactical solutions. So you get into that excellence model, you get into that model of providing a specialized service to the client. So that's what you typically find in consulting. Other than this, there could be a possibility that you enter or you get a job in a bank. Now this bank could be as simple as that, let's say you get into ICICI Bank. Now, when we hear this term that working in a bank, it doesn't necessarily mean to be a front-end desk job wherein you address the regular customers, but it could also be a profile in the debt-related job. So, it could be a credit financing role or a credit profile wherein you have to analyze the company's financials before approving the loan. Like these big corporates typically take loans from various banks, and there is a credit finance division in each of these banks which is more into analyzing the financial models of the corporates who come to them for raising loans. So you get into that profile and you get into the financial analysis part of that particular company which has come to you for taking loan. So in that particular division, in the credit financing division, you get to work on, again, multiple areas. So you might be thinking that it's more of an in-house finance role, but you are more into analyzing different profiles at the same time. Now let's talk about credit rating agencies. So we've got S&P, we've got Moody's, CRISIL, ICRA. All of these credit rating agencies, they also are into financial research profile. So they also try and analyze the company's financials to be able to come up with a grid on the basis of which a rating would be provided. So that's yet another job profile which you can get into after understanding the financial analysis part as part of this course. All right. So the areas that I've highlighted are more like indicative in nature. It's not an exhaustive list, but I think it broadly covers what kind of roles you could typically expect after you complete this course. So does this help, Ritika? All right, great. Fine. Any other question? Otherwise, I'll use the next 15 minutes before wrapping up the session to talk a bit about one case study that I've got for all of you. Any other question? All right. So let's get into a small case study that I've got for you. So what we're going to do now in the next 15 minutes is I've got this data point with me, and I want to show you that how we could use the Excel function for creating a loan amortization schedule. Now, if a couple of you have already taken loan, maybe for the purpose of sponsoring your education or for the purpose of buying a home or buying a car or for any other purpose, we definitely need to understand this loan amortization schedule. And it is not just for our own personal reference, even the companies also need to create this kind of schedule. But why? Why do the companies need to create this kind of schedule? Let us understand that first of all. Let's say there is a company which has taken a loan, and that company has taken a long-term loan. So company XYZ has taken say $100 million long-term loan. Now long-term debt is basically taken for a longer duration, say for 10 years for a particular project. So there is this one project which this company wants to execute, and for that project the company has taken a new loan, and that loan is worth, let's say, $100 million, which has been taken for a period of 10 years, payable in monthly installments at an interest rate of say 10% per annum. Now what I want to do is, if the company has taken a loan which it intends to pay on a monthly basis at a rate of 10% per annum, then you need to find out that what's going to be the monthly payout, what's going to be the monthly installment. So what you need to first of all find is that what is the monthly installment. What's that monthly installment? Let's say that comes, I'm just throwing an example, let's say that comes to 10. Now that 10 is basically going to comprise of both the principal component and the interest component. So then the next step is to figure out that what is the principal component. Can you please put yourself on mute? Thank you. Request, given that we are doing it on via online mode, I would request all the participants to please keep yourself on mute. Actually creating some disturbance. Can I request all of you to please keep yourself on mute? Thank you. Now, this is actually a problem with the online session, but yeah, we can manage it if we follow this kind of discipline. So thanks for keeping yourself on mute. So let's come back to our original discussion. So I was saying that in the monthly installment, if that's, let's say, 10, I would need to find out that what is the principal component, and then I would also like to find out what is the what is the interest component. The reason for doing this split is that the principal component goes to explain the outstanding debt amount which flows to the balance sheet of the company. Now, we would speak about the concept of balance sheet in greater details and how the debt schedule is created. But broadly speaking, let us understand that this split is required because we would like to adjust the principal component in the outstanding debt. So if I've taken a $100 million loan and I've paid a certain installments or a certain number of installments, I would want to know that what portion of that debt has already been paid, because a good amount of my EMI would be going towards the interest on that debt that I have taken. And that interest is basically going to flow to P&L. So it goes to the P&L. That is the reason why we need the split of that. So once you get the split of these two numbers, or the monthly installment number, into these two heads, you will be able to do the proper accounting. So that's essentially what we are going to see here, that if there is this company which has taken, let's say, a loan of $3 million at a rate of 10% for a period of 15 years, payable over monthly installments, then what are the number of installments that this company will pay? So if it has taken it for 15 years, then obviously each year has got 12 months. So the number of periods for which this loan would be paid is going to be 180. And let me show you the formula that I've entered here. It is essentially the number of years multiplied by 12. All right. Now comes the EMI part, that what is the overall EMI that you're going to pay to the bank. If you've taken this loan, then this loan could have been taken on various models. When I say various models, one is the EMI model that we're going to talk about here. Another could be that you're going to say that I will pay principal in equal 180 installments, and the interest would be paid separately on it. So that's another model. Third model could be that you agree with the company or the bank that I'm not going to be able to pay you good amount of money in the first 2 years or 3 years. So I'm going to pay a smaller amount in first 2-3 years, and then I will pay a higher amount in the later years. So that's another thing that we could capture in the debt schedule. So here my assumption is that we're going to pay it over monthly installments, which are going to be equal in nature. And in Excel, we have a function which is called equal to PMT. And PMT stands for payment, which tells us the amount that we need to pay on a monthly basis or on a periodic basis if we have taken a loan on EMI basis, which is basically the rated or a fixed number that we have to pay. I still see somebody has unmuted. Please, can I request all of you to keep yourself on mute? Thank you. Okay, let's come back to our discussion. So if I have to figure out that what is that fixed amount that I have to pay on a monthly basis, then that's going to come from PMT, which is going to ask you to provide a couple of inputs. As you can see in this syntax, the very first input that we need to provide is the rate of interest. And the rate of interest in this case is 10%, but this is 10% per annum. So I'm going to divide it by 12 to be able to find out the monthly rate of interest. Okay, so I need to find out the monthly rate of interest by taking this 10% and divide it by 12 so that you can work out the monthly interest rate, comma. The second parameter in this syntax is NPER, which is number of periods, which means the number of installments that you're going to pay. So that's given over here in the cell C6, which covers 180 installments or 180 months of payment. So that's the NPER. Then comes the PV, which is basically the present value. What is the present value of loan that you have taken? That is nothing but $3 million, comma. Then you notice that there is this term FV, which stands for future value, but it's given in square brackets. And in Excel, there is a standard rule that anything which we see in the square bracket is optional. We don't really need to provide that. If you want to give it, fine. If you don't, then you can skip this as well. But what is the future value of this loan? The future value of this loan is going to be 0, because once I would pay it in totality, I wouldn't be having anything left with me, right? So I would have paid the entire $3 million amount in the next 15 years. That's essentially this future value is all about. So if you give it, fine. If you don't, you can skip it and Excel will automatically assume it to be 0. The last is the type, which basically would ask you to provide an input as 0 or 1. So 0 is basically end of period payment, that you're going to make this payment at the end of each month. Like in this example, we have monthly payment. You're going to make the payment at the end of each month. And then there is this 1, which says that we're going to make the payment in the beginning of each of the year or each of the month. So I'm obviously going to select end of month, because if I take loan as of today, after 1 month I will start my payment. So it's going to be end of month. So I'll put 0. And this type also, if you notice, it's in the square bracket, so it's an optional parameter. So the last two are by default 0, which are assumed by Excel. So I'm going to skip that, because if it is 0, then Excel is going to automatically assume it. So we don't have to take any number over here. We are going to skip it, and Excel on itself will assume it to be 0. I'll close the bracket here. enter, and that's the formula, which gives us a value of $32,238 that this company is supposed to pay on a monthly basis. This is the amount that the company has to pay on a monthly basis. So what do we do? If I have to pay this amount for the next 180 months, then we've already got that list of EMI starting from 1, 2, 3, 4, 5. I've already created this list up to 180 months. So I'm going to fix this number of $32,238 in this column C, which is going to be a straight equal to this cell C7, which I'm going to drag down. So what I want to do, I have a data in the cell C7, which I intend to copy and paste down in all the 180 months, because every month the company will pay the fixed installment to the bank from which it has taken this loan of $3 million. Now the question is that if you simply write the formula equal to C7, then it doesn't help, because what's going to happen if you copy and paste this formula down, you notice it becomes 0. Because if you look at the formula, this for the other cell in the row above was referring to C7, and when you copy and paste this formula down, it becomes C8 and it is not fixed. It keeps on changing and it doesn't serve our purpose. So what I need to do, I need to go back. And I would say that when I refer to C7, I should actually be fixing it. And what we mean by fixing in Excel is, we will talk about this concept in greater details as we move ahead. But just to give you a broad idea, the fixing is done by putting the dollar signs, and those dollar signs you can include by using a shortcut, which is the function F4 key. Function F4 key. So when you use F4 key, that is used for fixing a cell reference. So what happens is, when you provide equal to C7, and the moment after you click on C7 and then press F4, it's going to bring the dollar sign over here, which is going to fix it, which is going to lock it, which is an indication that here the column C and row number 7 have been fixed in totality. And now if you're going to paste it down, everywhere it is going to show you the same formula equal to C7, because it has been locked in totality. It is not going to change or shift as you copy and paste it down or at any other place in this Excel sheet, right? So I'm going to simply copy and paste it in all the 180 months that we've got here. So we will paste it everywhere till 180 months. So in all the 180 months, if you notice, we've got this 32,238, which you can add by using this sum function of Excel, which is going to tell you that you have taken a loan of $3 million, but you are going to pay $5.8 million to the bank. And why are you paying this extra amount? That's basically towards the interest component. So you took 3 and you are paying 5.8. All right. So what we need to do now, we need to see what is the split of this 5.8. I know that at a totality level, the split is $3 million of principal payment, and the balance $2.8 million is towards the interest payment. So that's the basic split of the overall 5.8 number. But I would like to know the split of each and every data point. Like every month when I pay an EMI, I would be interested to see what portion of 32,000 is the interest portion, and what portion of this is actually the principal portion that I'm paying to the bank. And for that purpose, there are multiple methods, but the most common thing is that we can use PPMT function and IPMT function. Now, what do we mean by PPMT, IPMT? So PPMT and IPMT are two different types of functions that we've got. So these are the two different types of functions that we've got in Excel. PPMT and IPMT are the two types of functions that we've got in Excel, which are going to help us find out the principal payment and interest payment. That's the basic difference between PPMT and IPMT. So what we will need to do now, we will need to use the function called equal to PPMT. As you can see on my screen, the moment I write PPMT function, it gives me the syntax which is very much similar to the PMT function that we had earlier written. And it is also going to ask you the rate of interest, which is going to be 10%. But now bear in mind that you have to fix it, because you're going to copy and paste this formula down for all the 180 months. So please make sure that you fix it and then you divide it by 12, because you need a monthly rate of interest, comma. The next parameter is the period number. So we are going to take the EMI number from here, which is cell D11, comma, number of periods. So I've got 180 periods, which I'm going to fix over here as C6. So we've got 180 periods, and out of that 180 periods, right now we're talking about EMI number 1 or installment number 1. And what is that PV or present value of the loan that you have taken? So if you fix that $3 million over here and leave the future value and type, as I already discussed, these two are optional, and by default Excel would automatically take these to be 0. So we can ignore it. That gives you the principal component in this 32,238. The principal component is 7,238, and that can be straight away achieved by using this function PPMT. And as I said, there are other methods also that you could use. You could use the conventional way of computing the interest and then trying to find out the principal as well. But this is the best approach that we can follow to cull out the principal component from an EMI amount. And that's going to be 7,238. And similarly, if I write IPMT function here, that's also going to ask me the similar set of inputs, that what's my rate of interest, that's 10% divided by 12, comma, period number as EMI number 1, comma, number of periods as 180, and the present value as 3 million. And that tells you that the interest component in 32,000 is 238. So this explains the story that once you pay the first EMI of 32,238, then only 7,000 of it is going to go towards the principal component. So if you look at the closing balance of the loan at the end of this period, it's going to be 3 million minus 7,238, which is roughly about 2,992,762, which is roughly about 2.99 million. So, this explains the fact that you might have given a couple of EMIs, but you still notice that I've given such a huge amount to the bank, but my loan amount is still very high. And this explains the story. Why? Because out of 32,000, 25 is going towards interest. So obviously it's going to have a big pressure on your pocket. So if I, do this payment for the next 6 months, you would notice that after 6 months in total, I would have paid a good amount of money, roughly about, let's say, 200,000 or maybe 180 or $190,000. Now, after paying $190,000, you notice that only 45,000 approximately is going to be paid towards the principal. That is why your loan of 2.9 million is still outstanding. You have paid only 45,000 because you paid a total cash of approximately $190,000, but out of that $190,000, almost $150,000 was towards the interest component. So the original loan which got paid off was only $40,000 approximately. Right. So this kind of split is going to help you to figure out the amount of loan which you need to show in the balance sheet, because this closing balance you would not show in the balance sheet. This interest would flow to P&L, and EMI amount is the total cash flow impact to the company, because the company really pays this much of cash, but only a portion of it is going to reduce your debt component. So this is how this simple table is going to assist you to provide a proper feed in the model. So I'm going to copy and paste it down in all the 180 months and see what happens. Once you've pasted it everywhere, then you would notice that as you go down, your closing balance keeps on reducing. And at the end of 180 months, you notice that the closing balance is just 0. Because now if you do the total, it's 3 million here and 2 million, 2.8 million here, which actually explains the story that why this $5.8 million was paid, because you paid 3 million towards the principal and you paid 2.8 million towards the interest. And this debt schedule is technically called debt amortization, or what you call as loan amortization schedule, as to how your loan is being paid off and how you're going to pick each and every number from each month to be able to do the proper accounting and books. And even if you're doing the financial analysis, this would help you figure out the data that you need to flow to the balance sheet and the data that you need to take to the interest line in the P&L. So as we would move further and talk more about the financial statements part, you will get to understand that this interest expense is something which is very, very important for us to figure out in the P&L. And this is how you could find it out if you have got a loan which is paid back on the EMI model. All right, so this is just a small attempt to explain that what kind of work we are going to do in the subsequent classes. So let's conclude the session today, but before closing this session, I would like to highlight one thing, that we are going to do a mix of conceptual discussion and the practical question discussion. So it's going to be a mix of both. In some classes, we would talk about the do's and don'ts of a particular concept more from a theoretical angle and why that is logically required. So it's more like a discussion area for us. And in some other topics, you would straight away see yourself working on Excel file along with the trader, right? So maybe in some other session, once we meet, I would also have that Excel file sent across to you, and you would follow my screen and work alongside with me. So when we work on the financial model, probably I do it on my screen, you follow it, and you would also need to work on the file at the same time. Okay, so that's going to be the delivery model going forward. I hope you have got a broad gist of what is going to be covered in this overall course. As we started off, we're going to cover everything related to the financial analysis part, so that after completing this course, you will find yourself comfortable handling those aspects if you get into that kind of profile. And as part of that learning journey, we would discuss not only the theoretical concept, but also the practical application of it, and working on the ground, how to do it with your own hands on the Excel file. So that's it from my side for today. And thank you very much for making to join this session. I look forward to seeing you again in the subsequent sessions. Until then, goodbye, and we'll meet again very soon. Thank you.
Thank you guys for the joining the session. So